The World Bank reports that extreme heat could cost Europe and Central Asia 2.5% GDP by mid-century. EU agrees to 18th sanctions package targeting Russian oil and energy. And Japan's core inflation slows in June, remains above 2% target. Welcome to the Economic Bulletin with me, Hala Al-Hamalawi, and we start off with the World Bank, which has reported that economic losses from extreme heat are projected to reach 2.5% of gross domestic product by mid-century in parts of Europe and Central Asia. The bank noted that tens of thousands of heat-related deaths have occurred in Europe and Central Asia over the past 2 decades, a figure that could double or triple in many cities by 2050. The report highlighted that extreme heat causes machine failures, strained energy systems, and stalled supply chains. It also reduces physical and cognitive performance, slowing workers and cutting output, especially in outdoor industries like construction, transport, and tourism. In another report, the World Bank has revised its economic growth for Benin to average 7.1% over the period 2025-2027. The bank report noted that in 2024, Benin's economic growth reached 7.5%, the highest since 1990, driven by the services and industry sectors. It added that strong economic activity combined with moderate inflation should support a decline in poverty to 22.3% in 2027. The bank highlighted direct taxes and transfers are key to reducing inequality, as the fiscal system has reduced inequality by 3.0 Guinea points. Moving on to Europe, the European Union has agreed to an 18th package of sanctions against Russia, including measures aimed at dealing further blows to the Russian oil and energy industry. The EU will set a moving price cap on Russian crude 15% below its average market price, aiming to improve on a largely ineffective $60 cap that the group of 7 major economies have tried to impose since December 2022. EU Foreign Policy Chief Kaja Kallas stated that the bloc will continue to increase costs on Moscow, aiming to make ending the conflict its only viable option. In response, the Kremlin and a top diplomat have both dismissed the impact of the European Union's latest round of sanctions, asserting that Russia has adapted to life under such restrictions. Kremlin spokesman Dmitry Peskov said that Russia has built up a certain immunity to Western sanctions. He called the sanctions illegal and claimed that each new package creates negative consequences for the countries that back them. In a separate statement, Russian Deputy Foreign Minister Alexander Grushko said that Russia would analyze the 18th sanctions package and take the necessary measures to protect its interests. He added that some countermeasures are also possible. And for further analysis, we're joined from Moscow by visiting lecturer at the Higher School of Economics in Moscow, Mr. Romil Kalyubi. Welcome to Qnews, sir. And what distinguishes this 18th sanctions package from previous EU measures, particularly in terms of its focus on the Russian energy sector?
Actually, this is not the first time that the EU or American sanctions focus on the Russia's energy sector, but this time is we can mention that these sanctions are against the so-called gray or black fleet of some vessels that are transporting the oil under the sanctions. And the aim is to make it more difficult logistically for Russia to transfer or to transport its oil around the world.
The EU plans to implement a moving price cap set 15% below the market average for Russian crude. How feasible is this mechanism, and how might it differ in effectiveness from the previous $60 price cap?
I don't think it will be effective because actually during the last few years the European Union and the United States have been imposing on Russia the same type of sanctions that they used to impose against North Korea, Iran, Syria under Assad, Iraq, Saddam Hussein, Libya under the Colonel Muammar al-Gaddafi. But Russia proved that these sanctions are not effective against such superpower as Russia. And actually the West did not manage to erase Russia from the world economic map. And whenever the West imposes new sanctions, Russia and its partners find new ways to go around these sanctions.
So how has Russia managed to adapt economically, as you said, sir, to earlier rounds of Western sanctions? And what signs do we see that its immunity, as the Kremlin said, is real or overstated?
Actually, Russia managed to stay or to stand against the sanctions because these sanctions are not international, because they did not pass through the Security Council. Where would they face Russia's and Chinese veto? So these are only lateral sanctions imposed by the West, and Russia managed to diversify its foreign partnerships by developing ties with China, India, the Arab, African, and other countries, and to find alternatives in this way.
So is the EU's approach signaling a longer-term strategy to isolate Russia economically, or is it still largely symbolic, given the global market dynamics?
I think it's largely symbolic because actually we cannot speak about the European Union as an entity. There are countries which are really against Russia, such as France and Germany, but there are other countries like Slovakia and Hungary which call for dialogue with Russia, and their leaders visit Russia from time to time. So I think there was some solution just to issue a message that we still continue to support Ukraine, but on reality this changes nothing.
From Moscow, that was visiting lecturer at the Higher School of Economics in Moscow, Mr. Romil Kalyubi. Thank you so much for your valuable insights. And back to our news, and still in Europe, German Chancellor Friedrich Merz said that any upcoming tariff agreement between the United States and the European Union would be asymmetrical due to the U.S. government's reluctance to include the services sector in the trade balance. Merz stated that including services would significantly change the trade balance between the two sides. He also expressed hope that negotiations will conclude with the lowest possible tariffs for both parties.
Das ist ja auch das, was Präsident Trump immer wieder betont, was immer wieder sagt, dass Zölle liebt. I love tariffs. So, das heißt, wir werden uns darauf einstellen müssen, dass die amerikanische Regierung jedenfalls solange das Handelsbilanzdefizit aus ihren Augen so lange besteht, wobei dieses Handelsbilanzdefizit ein Handelsbilanzdefizit ist des Warenverkehrs und nicht des Dienstleistungsverkehrs. Wenn der Dienstleistungssektor mit einbezogen würde, sähe die Handelsbilanz zwischen Amerika und Europa schon ganz anders aus. Aber das akzeptiert die amerikanische Regierung nicht. Der dritte Bereich, den ich anspreche: Wir stehen jetzt möglicherweise in der Schlussphase der Verhandlungen. Die müssen abgeschlossen sein bis Mitte der übernächsten Woche. Ich beteilige mich da intensiv daran und hoffe, dass wir zu einem Ergebnis kommen, das wirklich mit so niedrigen Zöllen wie eben möglich für beide Seiten abgeschlossen wird.
The Federal Office for Customs and Border Security has reported that Switzerland's foreign trade declined between April and June, following a record set in the previous quarter. From April to June, the economy posted a trade surplus of 13.4 billion Swiss francs. Seasonally adjusted exports contracted by 5.3% compared with the first quarter to 70.1 billion Swiss francs, while imports fell by 7.1% to 56.7 billion Swiss francs. However, imports fell slightly by 1.5% to 18.7 billion Swiss francs. The balance of trade showed a surplus of 4.3 billion Swiss francs in June. Moving on to South America, Brazilian President Luiz Inácio Lula da Silva has called U.S. President Donald Trump's threat of a 50% tariff on Brazilian goods unacceptable blackmail, asserting that Brazil will not be dictated by the United States. Lula stated that Brazil is a sovereign nation and that any interference in its judicial system is a direct attack on its sovereignty. The threat came after Trump called for an end to the ongoing trial of former President Jair Bolsonaro. Lula vowed that his government would take all the necessary measures to defend Brazil's economy, including potentially involving the World Trade Organization. He also affirmed Brazil's support for multilateralism, stating that there are no winners in a trade war. Venezuelan President Nicolas Maduro has stated that the country's economy grew more than 6% in the second quarter of 2025. He added that the nation achieved 9% growth in the first quarter, despite what he called attempts at economic destabilization. The president credited continued growth to work and production efforts. In the MENA region, Kuwaiti Minister of Finance has launched an online registration service for companies subject to the Multinational Entities Tax Law. The new service, accessible via the ministry's website, is part of Kuwait's commitment to advancing its digital transformation. It aims to simplify the registration process for companies as required by the law's executive regulations. The ministry emphasized that the new service is designed to enhance industrial efficiency and improve compliance with tax legislation in the state of Kuwait. In Asia, China's Ministry of Commerce has revealed that the retail sales of consumer goods in China grew 5.5% on average annually over the past 4 years, with the sales expected to top 50 trillion yuan in 2025. It added that China's total retail sales of consumer goods rose from 39.1 trillion yuan in 2020 to 48.3 trillion yuan in 2024. The ministry noted that service consumption continued to grow rapidly, with the share of consumer spending on services rising by 3.5 percentage points to reach 46.1%. It also highlighted that consumption has contributed approximately 60% to China's annual economic growth on average. Data from China's Commerce Ministry has also reported that imported consumer goods recorded 7.4 trillion yuan between 2021 and 2024, the first 4 years of the 14th five-year plan period, that is from 2021 to 2025. The Commerce Minister noted that opening up for domestic and international markets is a key theme for the consumption sector in the current five-year plan. He added, citing figures of the World Trade Organization, that goods imports accounted for about 13.3% of global imports in 2024. The minister also noted that China attracted $700 billion in foreign direct investment, with the average growth rate exceeding 5% annually. He emphasized that foreign trade remained robust and resilient despite various pressures. China's Commerce Minister Wang Wintao has stated that he seeks to restore commercial ties with the United States to a state of healthy and sustainable development. He urged the U.S. to act in a manner benefiting its status as a major global power. He characterized the ups and downs in China-U.S. trade relations as having taught both sides that they need each other. Wintao also emphasized that the two nations are significant investment partners, not just trade partners.
中美经贸关系历尽风雨，但双方仍互为重要的经贸伙伴。这个中美作为全世界两大经济体，这个经常我们说大国要有大国的样子，大国要有大国的责任和担当。中美之间的经贸问题不仅仅是两国的，它是为全世界的经济繁荣发展要注入稳定和确定性。人为的进行这种脱钩锻炼尽管跌宕起伏，但水落石出以后，大家得出一个结论，尤其是美方明白了人为的脱钩锻炼这是不可能的这是说不脱钩，因为什么？这是符合经济规律也符合这个民意民意。
Data from the Internal Affairs Ministry has shown that Japan's core inflation slowed in June, but stayed above the central bank's 2% target for well over 3 years. This highlights lingering price pressures that back market expectations for further interest rate rises. The core consumer price index, known as CPI, cooled to 3.3% in June, coming down from a 29-month high of 3.7% as inflation showed signs of easing. A separate index that strips away both fresh food and fuel costs rose 3.4%. U.S. Treasury Secretary Scott Bessent has stated that the U.S. and Japan can reach a good deal on tariffs. However, Prime Minister Ishiba stated that while no specific terms regarding the 25% tariff were discussed, he asked Bessent to continue active talks with his chief tariff negotiator, Royce Akazawa. Akazawa additionally noted that both countries agreed to carry on their constructive dialogue. And for further analysis, we're joined from Tokyo by non-resident fellow at Hudson Institute, Dr. Santuru Nagao. Welcome to Qnews Economic Bulletin, sir. Now, how might a loss of majority by the Liberal Democratic Party coalition impact Japan's fiscal discipline, especially given, of course, its already massive debt burden?
Yes, this is important because July 20th, there is upper house election in Japan. So this consumer price index is 3% high every month. So even if a little bit is, still the price is rising in many products. So that will affect the result of the election. Typical example is price of rice. The last 1 year, the price has increased nearly double. So that's why originally the 5 kilogram is 13 US dollar. So in the April this year, it will reach the double, the $26 per 5 kilogram. So that's why it has increased in the double in the short span in 1 year. So in May, there is a scandal. The agriculture minister mentioned he haven't bought any rice because many people present him. So that's why, because of his remark, he need to resign that. And because everyone is a little bit upset because of the price is rising very drastically. So under the new agriculture minister, the government effort has made a little bit success. So now the price has declined from the $26 per 5 kilogram to the $23.5 the 5 kilogram. But still, compare with 1 year ago, the price is very high. So that's why under such kind of situation, a little bit tough result people can expect in the next upper house election. So in this case, how to form the coalition or how to form the cooperation with the opposition party will be the matter of concern. So Liberal Democratic Party face crisis, the people expect. But at the same time, still the opposition party side is a little bit small size and many party are opposition party, variety of the opinion inside in the many parties. So that's why the still current ruling party try to maintain the government with the cooperation with other small opposition parties. That is people's expect.
Yes. Mr. Satoru, what are the potential risks to Japanese government bond yields and investor confidence if election results actually lead to increased political pressure for stimulus spending?
This is indeed important. Indeed, the government cannot show the strong leadership after the result of the upper house elections people expect. Because if the governmental party is cannot get the majority in the both lower house, no election about the lower house just now, but and upper house, this is under election. So if the both houses ruling party lose majority, in this case, even if they can maintain the government with as a small opposition party, as a coalition party, coalition government, even if such kind of situations, influence of the ruling party is declined because they need to concede some policies with the coalition partners.
So to what extent could calls to slash the sales tax undermine Japan's fiscal stability, and also how might such a move affect its credit rating?
Japan's stability of the economy is rely on the stability of the politics. So because of the politics is stable, that's why the many people try to maintain their money in Japan. So that's why if the government is a little bit unstable, in this case, of course, government want to escape from Japan. So that's why this is a problem. But still, the current ruling party try to cooperate with the small opposition party to maintain their government. So that's why this is not completely unstable. But at the same time, the stability is very important for the economic growth.
So, sir, what are the key indicators that investors and analysts should actually watch in the weeks following the election to assess economic policy shifts?
Of course, most important one is the result of the election. But at the same time, after the result of the elections, new government try to deal with the United States because the tariff negotiation is this is under negotiation now. So that's why the new government will show their leadership to conclude agreement with the United States, and that will affect stability economy in Japan because rely on the trade. And so this too is very important just now. And after that, still the basic economy is very strong in Japan. So that's why based on this stability, Japan will improve, government will improve this situation. That is the third factor, and it rely on the policy of the new government after the election.
From Tokyo, that was a non-resident fellow at Hudson Institute, Dr. Satoru Nagao. Thank you so much for joining us here in Qnews. And back to our news, Malaysia's economy has grown by 4.5% in the second quarter of 2025, driven by strong domestic consumption and a steady manufacturing sector. This growth, according to official advance estimates, helped offset a slowdown in exports. The Department of Statistics noted that the economy faced challenges from U.S. President Donald Trump's tariffs, which have contributed to weaker export demand. Prime Minister Anwar Ibrahim and the central bank have both indicated that the government's full-year growth target may not be met due to these risks. Malaysia faces a 25% tariff on its exports to the U.S. if a trade deal is not reached by August the 1st. Moving on to the United States, where Commerce Department has reported that single-family home building dropped to its lowest level since July 2024. The decline is attributed to high mortgage rates and economic uncertainty, which have also pushed permits for future construction down to a two-year low. While overall housing starts rose to a surge in the volatile multifamily sector, economists warn that weakness in single-family construction could be a drag on the broader economy. Tariffs from the Trump administration are seen as a contributing factor, making it harder for the Federal Reserve to cut interest rates. The U.S. House of Representatives has passed a bill to create a regulatory framework for U.S. dollar-pegged cryptocurrency tokens known as stablecoins, sending the bill to President Donald Trump, who is expected to sign it into law. House lawmakers also passed two other crypto bills, sending them next to the Senate for consideration. One lays out a regulatory framework for crypto, and the other would ban the U.S. from issuing a central bank digital currency. China's Ministry of Commerce is urging the U.S. to abandon zero-sum thinking and remove unreasonable trade restrictions, stating that suppression and containment lead nowhere. The statement follows the U.S. decision to approve sales of NVIDIA H20 chips to China. While acknowledging this step, China remains opposed to other U.S. controls, including those targeting Huawei's Send chips, which it views as interfering with fair market competition. The ministry hopes that the U.S. will engage in consultations to correct its practices and stabilize global semiconductor supply chains. Crude oil futures rose on Friday, while gasoline futures jumped to a 17-month high as investors weighed new European Union sanctions against Russia. Brent crude futures climbed 1% to $70.0 a barrel. U.S. West Texas Intermediate crude futures gained 1.2% to $68.35 US. Gold prices rose on Friday as a weaker U.S. dollar and ongoing geopolitical and economic uncertainty boost demand for the safe haven metal, while platinum prices eased after reaching their highest level since 2014. Spot gold rose 0.5% to $3,353.8 per ounce after falling 1.1% in the previous session. U.S. gold futures were also up 0.5% to $3,360.5 US. Spot platinum fell 0.7% to $1,448.03 per ounce after hitting its highest since August 2014 earlier today. The dollar, however, was down 0.5% for the day. A weaker dollar tends to make gold cheaper for buyers holding other currencies. Global markets showed mixed movements as investors reacted to a flurry of economic reports and geopolitical developments, with futures for major U.S. indices seeing higher fluctuations. In the U.S., the S&P 500 futures were up 0.02%. Nasdaq futures edged up 0.04%, while Dow Jones Industrial Average futures inched down 0.32%. In Europe, the UK's FTSE 100 gained 0.17%. France's CAC 40 hiked 0.03%. However, Germany's DAX dipped 0.35%. In Asia, Japan's Nikkei 225 decreased 0.21%. The Shanghai Composite edged up 0.50%, and Hong Kong's Hang Seng Index rose 1.33%. And that brings us to the end of our economic bulletin, and here is what we have been covering. The World Bank reports that extreme heat could cost Europe and Central Asia 2.5% GDP by mid-century. EU agrees to 18th sanctions package targeting Russian oil and energy. And Japan's core inflation slows in June, remains above 2% target. Well, this concludes our economic bulletin. Don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok at QNewsEG to stay informed. I'm Hala Al-Hamalawi. Thank you so much for watching, and stay tuned for more updates here on Qnews.